Hello, good afternoon, and welcome everybody. Thank you for joining us. My name is Klaus Mansfeldt. I chair the Luxembourg Private Equity and Venture Capital Association. Today we will have what we call a roundtable, a bit of a discussion around the topic of private equity and venture capital, and not only in the context of numbers and returns on investment, but also in terms of its position in the economy, its effect on employment, and other more societal factors as well that we'd like to share with the broader community. And we have invited today, and thank you very much for joining, members of the public administration, of government and its agencies here in Luxembourg, as well as financial practitioners in Luxembourg and internationally. Venture capital is probably understood. Startups and ventures, almost speak for themselves. Nothing ventured, nothing gained. The other part of private equity, the PE part, is a bit more odd. It's less recognizable acronym. Bit odd, in fact, just describing an element of a capital structure. I think the best way to think about it is private enterprise, PE, private enterprise. Most companies are privately owned. Of course, many start with an entrepreneur, a founder, and remain in such ownership or families privately and thrive. But increasingly also, many companies in the private space are owned by private equity and private equity funds, because private equity generally describes the institutionally owned private enterprises in the economy. And what do I mean by institutionally owned? I mean they are owned by a set format of investment funds that are domiciled, amongst other places, like here in Luxembourg, and they invest in private companies and own them and manage them. The money they get typically is from institutional investors, typically within that pension funds across Europe, America, North America, anywhere in the world, in fact. Pension funds are the main investor base for private equity funds. And why do they do that, by the way? They do that because of returns that are a little bit higher, historically speaking, than what one can generate from public markets. Maybe 4, 5, or 6% per annum on average through the cycles seems to be the case. And how is that possible? That's a long discussion. How does private equity manage to do that? They do it, I would say, through a more efficient ownership setup. So they just have an efficiency gain, efficiency of decision making. They're usually controlled by a narrow set of owners, and they run the companies with highly efficient capital structures. And these factors together gives these companies an edge. And that's a good thing, because companies with an edge have an ability to compete, and in a marketplace of competing enterprises, only the fittest survive. But when you survive, you grow and employ more people, you procure more goods and services from suppliers in the economy, and everybody spends. Which leads to tax income, for example, for the government to then dispense with through their budgetary programs. So this is why, private enterprise matters as much as public enterprises. And within that, that's also why private equity and venture capital matters. But without further ado, I'd like to show you a small video, which describes a little bit generically what goes on in a private equity cycle.
What do startups and well-established companies have in common? They need investment. Investment to help them grow. Now, growing might mean building factories, hiring more staff, maybe creating innovative products, or buying another company. Investment could even help save a company from closing down. The investment might be borrowed money from a bank, or the company could sell shares and raise money from the stock exchange. But some are companies looking for something more. They're looking for smart money, an investment from someone who'll help guide them in building their business. A private equity investor becomes part of the company they back, generally taking a board position with the long-term goal of nurturing a business, helping to foster growth and creating additional value. For a small business, this could involve helping turn a great idea into a commercial product, or taking an existing product into new markets. For an established company that needs an extra boost, private equity experts can help management improve, or find other companies to join forces with. If a big corporation sells a division that no longer fits into its business plan, private equity investors might acquire it. Private equity will give this division the special kind of attention it needs to grow. Private equity investors can also help companies face challenges. This might mean revitalizing underperforming divisions, or even restructuring a business to prevent it from failing altogether. Private equity fund managers invest money from pension funds, banks, insurers, or savings accounts. They also invest their own money, meaning they've got a direct stake in the company's success. When a company has reached its target, the investors sell their equity. The value created is then shared out between all the people who provided the original investment. And whilst of course there are exceptions, most companies backed by private equity become stronger and more valuable. Which is why private equity matters. It helps to build better businesses. And that's good for employees, pensioners, investors, and the European economy.
From the LPEA team. Before I start, I just wanted to greet also our Luxembourgish community and audience, which is very essential for today's roundtable. So, schön guten Match und ein herzlich willkommen. Das ist natürlich ein Plaisir, euch heute begrüßen zu können. Wir wollten euch merci so für die Zeit, für ein Interesse. Das Jahr feiern wir auch unseren 10. Geburtstag. Leider selbst echt der größte, das dazwischen gekommen, Covid. Bon, wir natürlich alles digitalisiert und hoffen, dass die Roundtable von heute euch gut gefallen kann. Ziel von heute ist natürlich, die positiven Effekte von Private Equity von unseren VC-Industrie natürlich zu erklären, mehr zu bringen, wie zum Beispiel Finanzment von PME, Investments an der Innovation, mehr aber auch natürlich neue Arbeitsplätze. So let me now switch back to English. And also, as I just mentioned, we are having our 10th anniversary this year from an LPEA standpoint. Let me also share with you quick snapshots of the association. So our main goal is certainly to represent and to promote and defend the interests of our members and also industries. We are composed of 280 members, which you can categorize with the full members. Those are the GPs, so the managers. We also have the LPs, the investors, and family offices. The second category is the associate members. They are the professional service providers we need here in Luxembourg. Those include, for example, the law firms, but also the audit companies, the banks, PSFs, and also AFMs. And the last category is composed of non-executive directors and also entrepreneurs who are very happy to join also the association. Next to that, we fight for three main themes right now and try to deploy them with you in order to build the future of Luxembourg and the financial sector. The first one is public advocacy. That today's example, the roundtable, completely makes sense because here we are here to demystify the private equity asset class, to share with the general public what the benefits of private equity are, and that we can do via such events, but also then press campaigns and also nice messages we convey to the outside world. The thought leadership is the second highway we currently work a lot on. That comprises the contents. So we have very professional technical committees and clubs who are either dealing with legal and regulatory topics, We also have strong contacts with the different ministries and ministers, be it finance, economy, and others. We are very happy to collaborate strongly with the CSSF and also to participate with our ambassadors to different working groups, be it AML, but also AIFs, etc. Next to that, we're also very happy to organize webinars and to answer to different public questions, be it from the EU Commission, but also from other associations. And there we are very happy to be able to count on Invest Europe. And the last element also I wanted to share with you today is the talent attraction and development, which is very important for the sector, which we have to develop further. And that's why we started this year the LPEA Training Academy, which we'll have and host 2 times next year. We are partnering up with the University of Luxembourg, with Sacred Heart University, and we have developed a new career website, which allows our members to post their different job positions, but also for the talents to come to Luxembourg and then to fill in some applications or light CVs, and then the matchmaking can happen. So those are all the main missions and projects we are currently handling, and that's why we are here for. So without further ado, let me also introduce you now to Martin Bresson. He is the Public Affairs Director of Invest Europe, and he will talk about the benefits of the private equity and venture capital industries.
First of all, thank you very much for having me on such a venerable panel, and for the kind words of our cooperation, which I can only reciprocate to the Luxembourg Association. As laid out, I am to say a few things about the benefits of private equity and venture capital industries. And I am in the very fortunate situation that I stand on the shoulders of giants, meaning that our very eminently great research team has done very recently a report we call Private Equity at Work, which is the first time we've managed to gather across Europe data on our employment and job creation. And I think, as Klaus alluded to today, is about not just about the technicalities of how private equity works, but also our contribution to the wider society, which is, I think, largely underestimated, also because we're either seen as only seed money in the easy or low end of companies' growth, or as Klaus also mentioned, slightly more opaque. What is it actually? We've done this report on private equity at work, focusing on employment and job creation. I'd love to say that these are data from 2020. It's not. The COVID infected data, so to speak, and if you forgive the pun, we will be collecting later this year or earlier this year. But nonetheless, I think it's quite illustrative for how private equity is not just an alternative or a fringe contributor to the economy of Europe, but actually is indeed a cornerstone of the European economy, and hopefully should be perceived even more as such, which evidently is my job as a public affairs director for Invest Europe. So here you can see some of the raw data that or not raw data, the contributors and data that we've pulled from this cross-European report. And in all honesty, I mean, maybe I should admit that I've only been working for Invest Europe for a little under a year. But nonetheless, I think some of the numbers here was for me quite surprising. So 10.5 million European employees, or indeed 4.5% of the total European workforce. And this is of the total European workforce, including public employees, which is quite a significant part. And remember, this is then, well, if you make an extrapolation as to what part that would be of the privately employed European workforce, you'd get a significantly higher number. But the number, I think, is significant enough in itself. And we've pulled this data from our members and from other venture capital PE companies and large buyouts with a very conservative extrapolation. I think when I started a little under a year ago from Invest Europe, we were sort of going around with a sort of a hunch, a gut feeling saying, oh, it's probably 6 to 8 million. And so we were happily, positively surprised by that our contribution, that our sector's contribution is actually 10.5 million employees working in private equity-backed companies. I think maybe even more surprising, or if not, but indicating how important our sector is or should be received is not just how many we employ, but also the job growth. And again, these are 2017, 2018 numbers. So given the chaos that we've been through over the last 6 months, with a pinch of salt, and we'll see, but just nonetheless, look at this. Employment growth in PE-backed companies in 2018 was 5.5%, which is 5 times as much as the European growth market grew on average. 5 times as much, which in my world, again, is an indicator of not just being quite a force of employment, but also actually being a force of new jobs, hence innovation. And I think when you look at that from a policy perspective, which is my primary job, and we look at some of the political challenges that Europe, or the world indeed, is facing, big transitions into digital economy, big transition due to climate change, big geopolitical challenges in form of Brexit, China, the US, depending maybe on how November's elections fall out. For those kinds of challenges, you would need someone, a capable financial carrier that can help companies with that transition. And it's my honest opinion that these numbers indicate, with the level of growth that we've had, even in troublesome years, which 17 and 18 was as well, maybe private equity is uniquely placed to help companies with that transition. We've broken down the numbers for today just a little bit more, moving hopefully for you guys a little bit closer to home, and drawing down from the data set, not just from Europe wide, but for Benelux. And as you can see, and I don't know if people in Luxembourg feel as a Dane do about Swedes, but if these numbers were from Scandinavia and Denmark were doing so much better than Sweden and Norway, I'd be bragging about it. Luxembourg evidently in job creation being above the 5.5% average and doing better than both Belgium and Netherlands. And you can see so that the employment and the job creation data there. I think one point, and it goes back to the points made about Klaus and the positioning of private equity venture activity in Luxembourg, not just on a European level. You'll see quite a significant amount of fundraising, very large amount of investment. But I think worthwhile noting is that Luxembourg is not a transitional hub. There is a lot of money actually also invested in portfolio companies in Luxembourg, 2.6 billion since 2015. So the point I will getting to here is that not just for a Luxembourg or a Benelux, but also for a European economy, the private equity venture capital is a solid contributor, not just a niche or a fringe addition to the bank financing model that we are otherwise seeing is prevalent throughout Europe. From my sake, that kind of moves. When we developed these data, one key point for us was, I think, that we felt not only that we had a story to tell, but also that we needed this data set in our conversations with, as today's conversation with the audience, in our conversations with policymakers and regulators, to elevate the point that I've made here about our position in the wider ecosystem of financing. I think to some extent over the last 2-3 months, we've kind of felt that the data is solid and it's good to have, but maybe we're knocking on an open door. We have seen, particularly on a European level with the Capital Markets Union, that there is an increasing alertness with the European Commission and other regulators to how a Capital Markets Union cannot function properly without due respect to the private equity contributions. And I think we've moved from being a side or a fringe issue to being to the very core of some of the initiatives that the European Commission is laying forward, particularly in the Capital Markets Union action plan. I'd be lying if I said that we love every initiative in that action plan, but we do appreciate the fact that private equity has moved into the very center of the Capital Markets Union action plan. We do appreciate that there's been an increased focus on the ecosystem that provides for private equity. We're looking at solvency rules and insurance companies' investment in private equity funds. We're looking to capital requirements for banks. We're looking for professional or semi-professional investors, increased capabilities, but also then increased opportunities to invest in private equity. And I think those, for the supply side of it, is key initiatives that we're having high hopes that they will lead to a more positive environment for private equity in Europe. Then evidently the big thing, sort of the core thing for our industry, is the AFMD review coming up next year, which in cooperation with my colleagues from Luxembourg and other countries will be sort of the big policy issue that we will be addressing on a European level. But also in that respect, I think we've seen from the policymakers, or at least from the regulators at this point, a better understanding of how our industry functions and how it differentiates itself from hedge funds and others, and also why a too heavy-handed approach to a market that is actually very well regulated for now doesn't necessarily need much further regulation. And I think that would be sort of our general approach to that moving forward. As you can see, this is my day job. Is 16 different issues across the various spheres of the regulatory framework that covers our sector. I'm not going to go into all of this, and I think I've actually not mentioned foreign direct investments, which we can then touch upon if needed be in a Q&A session. Because I think aside from seeing a more positive move on the inside of the European regulation, I think there's an increased scare from outside influence and increased European protectionism, which is not necessarily a good thing, or which is not a good thing from an open investment environment point of view. But maybe we should park that for another discussion and another roundtable. Then finally, this is just a commercial slide about me and my colleagues at Invest Europe. I'm not going to bore you to death with that. I think overall, the point we're making, and you can on our website download the report which we released some 2 weeks ago on private equity at work. You'll find that there is some very solid data on job creation and on employment, which we believe actually emphasizes that that private equity is at the cornerstone of European economy. And I hope that with the breakout of data for Luxembourg, I've also indicated that it's at the cornerstone of Luxembourgish economy. And I think that would be my sort of opening remarks for this roundtable.
Thanks a lot, Martin. We're very happy to have you also in Brussels, and in order to defend those different elements, these new regulations. And we're also happy to have some Luxembourg representatives within Invest Europe. You're more than invited to ask different questions via the chat function. And so we will have at the end a session around that. So really, if you want to continue the discussion with Martin or the other speakers later on, that will be feasible. So then let's move then to the second discussion, this time on private equity, a tool for long-term, reliable, strong and sustainable investments in the EU. And our guest will be Günther Fischer from the European Investment Bank. Günther, the floor is yours.
Thank you very much, Stefan. Hello to everybody, first of all. Some words from my end, working at the EIB. Initially, some words just to open and put some background on what EIB is and what EIB does. We're sitting here at the beginning or the end of Kirchberg, depending on from which side you're looking at this, being owned by the 27 member states of the European Union, and being a policy-driven financial institution. Actually, little known, the largest multilateral lender and borrower in the world, headquartered in Luxembourg with 40 local offices, and the EIB group is composed of two components, being on one end the European Investment Bank, and on the second side the European Investment Fund, a subsidiary specifically focused on venture, fund-of-fund investments and growth capital within Europe. In 2019, the EIB has been, or the EIB group has been financing projects worth a little bit over 70 billion euros, primarily within the European Union, but also outside of the European Union. And I will seize this opportunity today to tell you a little bit what we in EIB are doing specifically also outside of the European Union. As mentioned, we are a public institution, we are a policy-driven institution. So we pursue the aims of the European Union, including, for instance, support to climate mitigation, support for climate action, supporting the construction of new, better infrastructure within Europe, innovation and the support to SMEs. And the amounts in these different segments to support these aims are substantial. Again, for instance, for the climate and environment side, we have been financing in 2019 projects with close to 20 billion euros worldwide. We are, in the pursuit of these public aims, also employing private equity tools, and we are relying on fund structures on the side of the European Investment Fund, but also on the side of the European Investment Bank here. On the side of EIB, specifically investing in infrastructure funds, in climate funds, in environmental funds, and also in microfinance funds. So we, as a multilateral lender, multilateral actor, are happy to cooperate with local teams, with intermediaries on the ground in the different markets that we would like to address geographically, be it a team addressing solar investments in South Africa, be it a team trying to promote wind energy or energy efficiency in Latin America, or a venture capital team in Europe. We're reliant on the local presence, on the local experience on the ground, and also on the track record and the expertise that these local actors bring. So this is helping us bringing the capital that we can provide into these markets and combining it with local actors with expertise in these markets. When we're doing this, and while we're doing this, we try to be catalytic. So we try to be early on involved in the creation of these vehicles and bringing them to fruition. I'll give you an example at the end of my short intervention on how we do this here, specifically also in Luxembourg. So trying to be catalytic, trying to be early on there, and then trying to attract further capital into these funds. We are also happy to take risks where other more commercially, more private-minded investors still are shying away. So for instance, an example, renewable energy in Africa 10, 12 years ago was definitely not the flavor of the month for commercial investors. We set up a fund-of-fund vehicle to address that, and by that help to create also the asset class, again, relying on local asset managers, local private equity infrastructure fund managers on the ground to build the track record for the asset class, to create the first projects that then are successfully developed, constructed and operated and exited, so that later on private investors are coming on board, and the risks for them are first of all accessible. The risk that they perceive can be hopefully then mitigated, or they are over time already reducing, so that they are attracted to the markets that we are in. And we try also from EIB side with the capital to be a substantial investor in the funds where we come on board, so to really get them over the hurdle into the implementation, into the rollout of their strategy. This approach helps us to deliver on our aims, again, in terms of climate, for instance, at the level of EIB. EIB has been, via the capital it has been providing, supported clean energy generation for more than 7 million households. And the almost exclusively this electricity provided for these over 7 million households is done with renewable energy. We have been using infrastructure investments, infrastructure funds to address affordable social housing, for instance. And by doing this, we have supported over 500,000 families, or homes for over 500,000 families in affordable social housing. We have been supporting access to safe drinking water for about 10 million people worldwide. This mostly, obviously, outside of Europe. And in terms of job creation as well, small businesses with our activities. On our end, about 4.4 million jobs that with our approach have been supported there. Now, this is all very generic, and I would like to give you one specific example that we're investing, and then two initiatives that we have been setting up in the context of Luxembourg. So let's start with the private equity example, where we're using private equity tools, funds, fund managers to achieve our aims. We have a fund-of-fund structure up and running that is called GREF, the Global Energy Efficiency and Renewable Energy Fund. This is a 242 million euro vehicle that we use to invest in renewable energy and energy efficiency, specifically in Africa, Asia, and Latin America. So the aim of this vehicle is to have a climate action impact, to support climate mitigation, to avoid the emission of greenhouse gases. We're exclusively active there in developing countries in Africa, Asia, Latin America. And we structured this as a public-private partnership using private equity tools. On the public side, we're working with the European Commission, Germany, and Norway, who have provided capital. And on the private side, we have pension funds from Australia, we have family offices from Europe, and we have North American asset managers who we, combined with investment from the EIB as well, attracted into this vehicle. These investors provide their capital, and we are managing this vehicle here from Luxembourg, investing in local teams. Again, the example of a Southern African solar fund, a energy efficiency fund in Central America, or a wind energy focused company in India. We have invested in 15 investments with these 242 million. GREF is fully invested now, and via the structure, we have supported on the ground more than 180 projects, all the range from, again, a milk company in Colombia, where we installed with the fund manager energy efficient equipment, where in a solar plant in South Africa that we supported, a hydro plant in Uganda, wind farms in India, the full range of technologies for renewable energy and the full geographical scope. With this approach, what we're looking for is, first of all, an impact on the climate side, climate mitigation. With these 180 projects, we have created 3 gigawatts of capacity for renewable energy projects. Annually, we're generating 3,800 gigawatt hours of electricity, and we saved 150 gigawatt hours of electricity with these energy efficiency projects. And this is equivalent to the consumption of 2.7 million households. So this gives you the second impact that we can achieve with tool. Aside from the pure climate mitigation impact, there's a social angle. By generating more electricity, we are enabling the local utilities to connect more households. In most of the countries where we're active, there's a deficit in electricity generation, so not everybody can be connected. So we're having a social impact there as well by providing access to energy. And on the social side as well, we're contributing to job creation. Now, purely with these 180 projects, we have created 3,500 permanent jobs. Of that, about 1,000 for females, and 5,500 temporary jobs, specifically during the construction area period, of which 500 were for female employees there as well. So with these private equity tools, with these infrastructure investments in climate funds and infrastructure funds, we are achieving a social impact, we are achieving a climate impact, and these tools can help us to deliver on our aims that we have. So this is one example of a vehicle that we have up and running here from EIB in a public-private cooperation. And I would like to conclude with two examples of where we, EIB, are cooperating with local Luxembourgish actors in trying to bring new climate funds, environmental funds here in Luxembourg to life. First of all, we have the Luxembourg Climate Finance Platform, which is an initiative where the cooperation is between the Ministère de l'Environnement et du Climat et du Développement Durable and the Ministry of Finance here in Luxembourg, who have provided 30 million euros of capital, which we are using to co-invest in climate funds worldwide. So this is a platform where the Luxembourgish government has provided capital to be channeled into climate impact funds worldwide. One of the two examples, and another one is the International Climate Finance Accelerator, an initiative here supported by the Ministry of Finance and again the Ministry of Environment, Climate and Développement Durable, and also run and coordinated by Impact, which supports new actors in climate funds management. The idea is to support the creation of new fund managers worldwide. We from EIB, we're supporting them in training, and for us it is important also to have an exchange with them, because it could be potential deal flow for us to invest in them. So this is another initiative in the Luxembourg context where we're trying to build a landscape using private equity tools, using private equity instruments and teams to deliver on the mission that we have, in this case climate, but also on the social impact, and mobilizing capital with these tools for the aims that we're pursuing. And I would conclude at this point, and obviously I'm open later for questions. Thank you.
Thanks, Günther, for your insights. Completely makes sense to have the sustainable investments as a clear vector for the growth of Europe and also Luxembourg, and to be champions in that field. Good. Let's then now move on to the private equity in Luxembourg, the impacts of P and VC on the real economy panel with Nick Tabone, partner at Deloitte.
Good afternoon, everyone. Just share my screen. Here we go. So I think it's important that we remind everyone as well where Luxembourg has come from on the private equity road in that respect. So historically, Luxembourg has been an SPV hub, or a portfolio holding company hub, and that was the 90s and the early 2000s in that respect. And Luxembourg's first foray in the fund process as well started in 2004 with the launch of the CCAR, and continued again in 2007 with the launch of the CIF. But the real impetus that Luxembourg has had in terms of the PE was when, with the advent of the AFM and the subsequent SCSP launch as well, which is a special limited partnership that asset managers started to use to have their funds set up also onshore in Luxembourg, and not just have the portfolio holding companies in that respect. In 2016, we had the RAIF, which is the Reserved Alternative Investment Fund, which continued to take us in the right direction and bring us more or less to where we are today. So now Luxembourg caters for a wider spectrum of the PE universe. As we said, it mainly was a back office center in the past, and now we have the larger asset managers on the private equity side and also venture capital asset managers. So there's a slight shift as well from a back office only hub to more middle office and front office functions as well being present in Luxembourg. So as you can see, a lot has been done, and Luxembourg now today employs a significant amount of people that are dedicated to the PE industry as well. This does not mean, however, that we should rest on our laurels, and definitely more can be done and more should be done to ensure that Luxembourg does retain its place as the hub for the PE industry in Europe as well. As you can imagine, statistics are not very easy to determine and to come by in Luxembourg when we're talking about private equity. And this is probably an area where we definitely need to improve on to get access to data that the AFM, so the fund managers, are reporting as well, be it to the Luxembourg regulators or to other regulators as well. Here, what we can see is the main drivers and the main asset allocation of PE funds that have been launched in Luxembourg, or funds, sorry, not just PE, but you can see the main impact is definitely that PE and VC and also real estate on the other side are quite dominant from an asset class in Luxembourg. As a rough estimate, and it really depends on sources and methodologies of calculating the asset size, we would estimate that the Luxembourg PE size is anywhere between 150 billion to 400 billion. And again, these numbers and the range is rather wide, but it is not that easy to get those statistics. But those numbers could even be bigger if we just had to take the undrawn capital, for example, in that place as well. All of this still brings us to a significant amount of asset managers, both local and foreign, and these are the main members and the main PE houses that we have that work out of Luxembourg and that are domiciled here and contribute significantly to the private equity and venture capital industry in Luxembourg. But before I leave you to the panel that will talk about success stories, I'd like to introduce the importance as well of PE in the wider economy, and this was also mentioned by Martin as well. I mean, PE supports innovation, and I think that is something key. This fresh flow of capital does support innovation, creation of new jobs and startups in that respect. But it also helps build successful businesses, and I think that is something important as well. There is additional capital that does not only need to come from bank financing that can help fuel successful businesses and entrepreneurs. It supports savers. Why? One of the largest contributors to the private equity industries are pension funds, and that is obviously, as Martin mentioned before, is where they have their long-term interest in the investments they make, and it matches the investment strategies of the PE asset managers as well, because it is a long-term investment strategy. But it also contributes to the society. We mentioned a lot of people employed as part of the private equity portfolio companies and investments that are made. That is direct, and there's also the indirect effect of that as well on the society. And we must not forget it's sustainable, as it takes a long-term sustainable view on the companies and the portfolios it manages. So I think to sum up, Luxembourg has come a long way from the initial starts in the 90s of having a few portfolio holding companies to where we are today, when we serve and we have presently on the ground from the largest LP being the EIF, and also large asset managers, but also we must not also forget the smaller asset managers as well that do contribute to this ecosystem in Luxembourg, which has become quite successful. So with that, I'd leave it to Stefan to introduce the next panelists.
Thanks a lot, Nick, for these snapshots. very helpful to get all the details we need to understand it. And now we will move on then to the panel on the local and international success stories. That one will be moderated by our friend Pierre Beisel from Arendt. Pierre, the screen is yours.
Thank you very much, Stefan. So, well, we have 30 minutes to bring the private equity industry closer to you, and that's the aim of the panel. We have three distinguished panelists here with me on the panel. I'm not sure you see them as a panel actually. Not sure how that works under Zoom. So we have first Anne Canet from HLD Europe. Anne is the managing director of HLD Europe in Luxembourg. And I will, after the presentation, I will ask each panelist to say in more detail what they are, what their companies are doing, and what they are doing on a day-to-day basis in the company. Then we have second Jérôme Vitamer of Expon Capital. Jérôme is a managing partner and founder of Expon Capital. Expon Capital is not his first job in Luxembourg, so he worked for another private equity fund before that, and he was also the president of the Luxembourg Private Equity and Venture Capital Association a couple of years ago. And last but not least, we have Serge Kranzenblum, whom certainly many people know, who is a well-known Luxembourg entrepreneur, who founded basically one of the biggest service providers to the private equity industry, but more generally the fund industry and the corporate industry in Luxembourg, who sold his company together with his partners to private equity fund, and will tell us more about that. So can I now maybe hand over to Anne to explain in what HLD Europe does and what she does on a day-to-day basis at HLD Europe.
Yes, thank you, Pierre. Hello, everybody. Yes, I'm Anne Canel, and I'm working in Luxembourg for the last 15 years now. And I launched the headquarters of HLD in 2015. HLD is a company born in France in 2010. It was created by three entrepreneurs, specialists of the private equity at the very beginning, because when they started, it was not really developed in France. We were still spoken of capital risk, capital development, and private equity was much too more Anglo-Saxon for us. And the ADN of the DNA of HLD is really this aspect of historical capital development in the European way of thinking. So what I mean is that when you speak of private equity, for many people, it's development by finance people. And HLD is a very classic model, an evergreen one. We buy brick and mortar companies and we develop them. So the idea is to identify large companies which are not completely optimized and which could be developed in an international way. So our focus is the Europe, and our shareholders are entrepreneurs also, and there are large entrepreneurial families of Europe. Yeah, that's the fact, and we have quite a good success for the last 10 years, and I will give you a little more information after.
Thank you, Anne. Well, handing over to Jérôme, maybe for his presentation of his company and himself.
Thank you, Pierre. Can everybody hear me? Yeah.
Perfect.
Wonderful. So yeah, I'm Jérôme Wittemer. I've been working in this industry, investing specifically in technology for well, as long as I can remember, even before starting my career. So that was 30 years ago. And I've been active in Luxembourg professionally since 1995, which was when I got my first job working in the city. And so what I do with the Expand Capital, which is indeed not my first job in the sector, is to scout for investment opportunities, pretty much, you know, around the country, around Europe, the US, and Israel. So I don't do that on my own, of course. We have a team of people that do that. And then we look at the companies, we analyze them, we meet the teams, and then we pick the ones that are interesting, that's pretty rare. Let's say it's, for us, it's 1 in 750 opportunities that we see, that we decide to back. And then we just work with them to create value for a period that is approximately, on average, 7 to 8 years. After which we sell the company, and that is let's say the end of the cycle, and where we give the money back to investors. So in a nutshell, that's what we do.
Thank you, Jerome. So now we're missing the only person who is not working for a fund manager, but who has strong links, I would say, with fund managers. So Serge, can you give us your background and tell us a bit about what was formerly called SGG and is now called IQEQ?
Sure. Good afternoon to everyone. Thank you, Pierre. Definitely, I'm Serge Kanselum. I'm the executive chairman of the IQEQ group. I'm known before as SGG in Luxembourg. We are a provider of investor services, mostly to the private equity and real estate investment industry. We care for different kind of investors, the asset managers themselves, family offices, ultra high net worth investors, and multinational corporations. I've been the co-founder of the group in Luxembourg. I mean, it started a number of years ago. I've been in Luxembourg for 35 years. I'm a Luxembourger nowadays, and very proud to be. And I must say that private equity has been instrumental to the success of our group, because not only the private equity houses are our clients, our main clients. We do more than 50% of our revenue worldwide with the private equity industry. But we did everything thanks to the backing of the private equity funds. So I have done already 3 MBOs on the companies, the latest one being in 2016 with a European private equity group called Astor Partners. So I will be very pleased to give you, some sense of what is to be backed by private equity, but also what is to service the private equity industry from Luxembourg.
Thank you, Serge. We'll get to that in a moment. Thank you very much. Well, maybe back to Anne. I think Anne gave a brief picture of what private equity is and what it does. Maybe Anne, could you maybe explain to the public, for us that's it's all clear and we all know that, but what would be the difference between private equity and venture capital? How would you define one and the other?
Yeah, and first I will just confirm that Serge company is everywhere, and that we started with them also. So thank you, Serge, for the last 5 years. And yes, for the private equity and venture capital, you're completely right. It's very, very important to make the difference, because you address two really different kinds of shareholders or investors first. The venture, Jerome will explain you why you should do it. And private equity is for people who trust in reasonable development and who don't expect an incredible return. And especially it's the dialogue we have with our shareholders. They are coming because they want to build something and to help, and not only help, but make money with it, clearly, but help to develop companies. And it's a very key point, because They are expected to be long-term and to be here when we need them. If you had that for HLD, we are evergreen. What do you mean by that? We mean that they don't expect to have their money back at a fixed date. When they put money in HLD, they say, Anne, I would like to invest 10, 20 or some millions in the company, and I will put it for the next 20 years. Why 20 years? Because when they commit the money, they are ready to be called during 5 years, and from the moment they start, they put the money in, they will have a 10 years period of blocked or not favorized way off. Okay, so they come for develop a project and to invest in real companies in Europe. We are an extreme model for private equity, but I think it's a very good example of the panel of offer between venture capital and private equity. When you invest in a HLD company or in other ones who are a long-term view, you are really giving a bet for the future, and we often say for your grandchild, because we are doing development. The results are totally exceptional. To give a clear view on that, we have more than 35% IRR on the last 10 years. So it's a good place to be. Welcome if you want, but really it's not a liquid investment. And I think it's the major point of decision when you make private equity. The second thing is that we will focus on companies that are in development and not search for the best idea of the year, of the decenny, or we won't be the next mangrove, clearly, and but we could have very good company that will create a real value. So for me, the private equity specificity in Europe, in the models we have around us, are models of long-term view, development view, and really to be ready to commit with the companies you invest in for the long term.
Thank you, Anne. And then maybe a question that I will ask you, but also Jérôme. You indirectly answered it, but I'm asking it again just to be very specific on that. How do you add value to those companies? How do you develop those companies?
Yes, we do a lot and a lot of different things, and I have taken in mind 3 examples for that. 2 companies we have had in our portfolio. One is still here, and the situation of COVID crisis. In these 3 examples, we could see specific help of the private equity. The first one is Filorga. Filorga is a cosmetic company we bought in 2010, and it was a small company with a brilliant, smart, exceptional manager. And we co-invest with him, and we put each 10 millions. We lend him the 10 millions at a very high rate, but we lended the money. And with our 20 millions, we have sold the company to Colgate last year for €1,500 million. Okay, and it's not a startup, it's not a venture project. It's just luck and sweet, because we have worked with Didier Tabary, he is the manager, to develop a very good brand to the international development, what they have not done before. So the international development is a critical asset of private equity that companies don't do alone. We have backed him also for making development of new products and to challenge the marketing. So also it's to bring know-how in specific field they would have not done. And for the case of Filorga, it has also be the opportunity to give him the balls to go, because he was backed by large shareholders, and the sky is the limit then. You could wait, and you are not in the need to sell your company after 5 years because you are completely stronger. We have been here during 10 years and it has been this exceptional story. So Filorga, yes, it's a kind of miracle, but it's a story of a very good management. The second case where we help is the Funbridge. Funbridge, it's a company which propose bridge, the game on the bridge online. So it seems to be absolutely not attractive and to be a very non-fashionable. And you add it, it was a very small company at Lille in France, 20 people. Except the fact that bridge is a game that addresses a public of older people who accept to pay for it. And we have a game that is paid and that is really positive. You have a business that is not only by turnover, but also for its net results. Okay, and this is a small story could have remained in Lille, and what we have done is to merge it with the American competitors. And we have gone to Bill Gates, who was the owner of BBO, the competitors in the US, and we have built the one bridge online team in the world. And this company, it was impossible to imagine it for each of them before. And at the moment, it's a real success, and especially during the COVID period, because if we have not done the marketing for Funbridge before, it has been impossible to relay the club for bridge. And with the back we have bring to Funbridge, and with the tool of BBO, we have been able to propose this service worldwide. And it's one time again a growth of more than 30% per year for the last 2 years. Here the story is to have been able, as a private equity, to find the correct partner to be a worldwide actor. And the third example, I think, of the help of a private equity is this crucial period of COVID, because for most of our companies, they are European ones, the difficulty was to be able to discuss with their banks, to know all the regulatory or the tax exception they could have, and to bring them the know-how to optimize their situation to survive the crisis. And we are very proud now to have succeeded in that, because all our companies are in good health after the crisis. I hope we are after, but they are in good health now. And for all of them, it would have been impossible to be on all the subjects, to have all the information if they have not been backed by a private equity. It's not really, the situation is specific to our size of companies, because we are in capital development in quite small or middle range companies. But it's, I think, three very good examples.
Thank you very much. So that's very specific, very concrete, and people see what is happening in private equity. Well, maybe over to Jérôme, and we did not really prepare that question, but I'm sure you can answer it. Jérôme, you are more focusing, your Expand Capital is more VC fund, and since we had the question private equity versus VC before, can you talk about value creation in venture capital, which I think is a bit different from what Anne is doing? Do you have maybe one or two examples that you can show to the public?
Yeah, sure. Well, first, maybe to reframe, I think Anne was saying, so we bought the company, we own the company. So in venture, we don't buy and we don't own the company. So it's a very big difference. We tend to take, anywhere between 5 and 25% of a firm, rarely above 30%. Of course, there are several rounds of financing, but I think that's a very key difference. So we work with the management, but the management typically, they are the founders and they own the firm. So in terms of the relationship, I think the dynamics are pretty different. Then in terms of what we bring, Well, it's a bit à la carte. It depends on what the needs of the founders are. So we're managers of a fund that some people here in the audience may know, which is the Digital Tech Fund that invests and supports the Luxembourg startup ecosystem. And what we do there is, because we invest at a very early stage that we call seed, or it's after the family, friends, and fools, and before typically VCs back them with what we call a Series A to grow really the sales. It's really in between, and there, well, they need a lot of help across a vast variety of let's say of needs across the operations, and that can be in terms of building the team, so helping them identify the right people for the right type of positions. It's helping them to craft the strategy of the firm, even though they know what they want to do, but it's an ongoing subject. It's about making introductions to clients, to strategic partners. It's about all the things that help them create the firm. We do spend a lot of time with a lot of the firms. I mean, some of you may know a company like Wizeta, which is based in Capellen, which is a world leader in AI for Industry 4.0. So they work with the likes of Arcelor, and the firm needed to raise a new round of funding, and we'll help them put together their presentation, their data room, which allows investors to research and analyze the company, and then we introduce them to a wide variety of investors, so that they ended up closing a round of financing and could pursue their development.
Well, thank you, Jérôme. Also very concrete. Well, my next question was to be, what's the impact of the private equity venture capital industry on the real economy? But my impression is that you answered the question already, and you. But if you want to add some flavor to that, go ahead.
Yeah, I think there's various ways of addressing it, and I think that Martin has done it and Nick has done it as well. I think just maybe from my perspective, a strong private equity and venture capital industry supports a thriving industrial infrastructure with more capable companies. And when I say that is, for instance, okay, you're saying, okay, ArcelorMittal doesn't need any help. Well, actually, the way they work is pretty old. They're not digital, they're fully analog, as people know. And you working with a company like Wizeta, which is at the leading edge worldwide of what they do in terms of AI and digitizing a big old conglomerate of industrial conglomerate like that, it allows the company to be more competitive, to stay more competitive. So that makes the overall economy for Luxembourg, for instance, more competitive. And it's not only so about local growth, it's really about the European context and the global context. I think that some people sometimes may forget that it's not about only Luxembourg. We're not in a small aquarium that's closed. It's open to the outside. And our firms in Luxembourg, we need to stay, they need to stay competitive. That's why we have seen that, EQIQ and some of their competitors have had some, backing from large buyout groups, private equity groups, and they have been able to, push themselves forward and be world leaders in their fields. Yeah, and one last thing, maybe I think it's the industry also brings some resilience to an economy because it helps diversify and offer a breadth of opportunities for people to find the job they like. It's not about only risk management or compliance for PE. But the firms we've invested in, like, Salon Key, which is, a firm that you may use to get an appointment with your hairdresser in Luxembourg. They do hire a wide range of types of jobs. Passbolt in cybersecurity as well, and there's many examples like that. So a vast range of possible type of jobs.
Thank you, Jérôme. Very clear. Well, can you say just very quickly, because we're running out of time, although I'm hopeful to steal a couple of minutes from those who were too quick before, just on we're on the COVID crisis, everybody knows that. What's the impact on the PE and VC industry? Is it as hit as other industries? Does it create new opportunities? What's your take on that?
Well, for me, there's two levels. I think that private equity and venture capital operators themselves, so people like Anne's company or my company, we suffer only indirectly. And that means through the portfolio companies, than directly, because we're relatively stable as firms. Some of us that manage funds, those funds are have a 10-year term. And so that again means we have a lot of stability, and we bring stability to the overall economy. Now the portfolio companies, of course, they are a mirror of the economy. Some companies suffer, and we have companies in the travel industry, I have to say, and that they struggle a great deal, and we don't know if they're going to make it. And some others flourish. In smart cities, we have a company in electric micromobility, food delivery. They've been booming. So it's very much a mirror of the economy. But I think that Martin and mentioned it. In general, private equity-backed firms are better managed. We have strong governance principles. And hence perform much better.
Thank you, Jérôme. Okay, so now let's move to the reverse angle. So Sergio, as I said initially, you're the founder and head of a company which is being owned by private equity and which is servicing the private equity industry. Well, I know a number of CEOs of companies who would say, look, never will my company be bought by private equity. I'd rather dissolve it. But I'm sure you can tell us a different story. You can tell us why you took that decision to sell your company to private equity investor, while staying in the company, of course, and working together with that private equity investor. So, very interested to hear your feedback on all that.
Yes, sure, Pierre. Definitely. I mean, we had a vision for our industry, for our company. We wanted to be part of the consolidation that would happen. In the investor services industry, there were a lot of small companies. And we knew that there was going to be a consolidation, and I decided to be a lion and not a gazelle. So to drive that consolidation. How do you do this? You can, if you are too small, you cannot do an IPO. You can take private money, but it's not the same. You can sell yourself to another player with a different strategy, and that was not what we wanted to do. So we wanted to apply our strategy on the market and to become first a European player and after a global player, a multinational. So you take money from a private equity group. Why? Because you sell them the strategy. And if they agree with the strategy, they are going to back it. It's going to be smart money. Money is nothing. This is smart money that we need. And private equity groups, if you find the right one, they are going to put a lot of resources at your disposal. They are going to put their M&A teams, because our strategy was a buy and build strategy. So we wanted to acquire businesses in different countries or adjacent businesses in the country we were in. That was something very important to us. So, but we didn't have that experience. The other thing is, if you are a good entrepreneur, they make you a better entrepreneur because they challenge you on decisions, to hire the best people, to take the right decisions, you know, for your expansion, for, I mean, the way you work, your processes and everything. And they have experience because they have done it with other people before. So they share their experiences. So you have someone, you know, when you're an entrepreneur, you're very lonely. You have no one to talk to. You can talk to your staff, but it's not the same. Here, you talk to your investors and you're fully aligned with them, because I'm the second shareholder of the group, you know, and it helps a lot. So it doesn't work for everyone, but I must say I'm a very happy not CEO anymore, but chairman of a company under a private equity. And from a small business in Luxembourg of 40 people, we are now a multinational with 3,000 people, and we are present in 23 countries. Frankly, I could not have done it alone, even with money.
Thank you. I think that's a good plaidoyer for the industry. It also shows why some CEOs might not want private equity on board because they're not used to sharing power with someone else and they want to keep it. Maybe just to follow on again, because we are short on time, maybe you can give us a flavor of what is required if you want to work for the private equity industry. What do those guys need? What do they want to see from a service provider, more specifically from a Luxembourg service provider? How do you sell your services to those guys?
That industry has professionalized itself quite a lot in the last years. So, I mean, they need, you know, the private equity firms, first of all, they need to set their business to have their business in a very stable environment. And Luxembourg is a very stable investment hub. It's one of a number of them. You know, as I mentioned, we are present in 23 countries. They are in Asia, there is Singapore, for the African market, there is Mauritius, for the US, there is Cayman. There are a number of investment hubs in the world. Luxembourg is one of the best ones, I must say, because it's stable, it's regulated, and they want regulation. Everybody thinks that they want no regulation. We want to have regulation because regulation is good, because it gives trust to the investors. So what they need from a service provider is, we are here to make them compliant, to make sure that they are going to file their accounts at the right time, with the right, I mean, with the adequate information. We need to be precise. We need to be at their service, and we need to understand the full ecosystem. So, I mean, a very important thing for me was to work for two sides of the ecosystem. One was the asset managers, the private equity and real estate asset managers. The other side was the investors. So the pension funds, the family offices, and we also service those. So we understand all the different parts of the ecosystem. And I think that's the, I mean, part of the success of our group.
Thank you very much. If the LPEA allows me, I would like to ask one last question to each of the panelists, and it will be the same for each panelist. The question would be, what is required to have a good ecosystem, a good infrastructure for the PE industry? What do you expect from a country, from Luxembourg specifically? What is good and what might be improved? But you would have to be quite short because I think we exceeded our time. But if everybody could, within 1 to 2 minutes, just answer that question. Maybe Serge, starting with you, since you're...
So I think we need to have full stability in the legal system we have and in tax system. This is very important. Whatever the tax is, stability is paramount. The other thing is, we need to be good not only for the funds themselves, but also for all the special purpose vehicles, what is called the SOPAR fees, because the private equity industry needs those vehicles to invest in private equity. And Luxembourg is only an investment hub. We have foreign investors, pension funds, so the pensioners of this world investing through Luxembourg, using the stability of the country to invest somewhere else. This is very important. Why do the people come? They come because we have a good ecosystem of professionals and a good legal system. And last word, our industry, only the administrators, we contribute to more than 1 billion of the state revenue every year, which is huge. So we have to think about it before changing anything.
Very good point. 1 billion, it's a lot. And maybe your, can you take the next on the same question?
It's clear for the point of the stability and the type of Serge is completely right. I would add that we need people, and we need people in investment, we need training, we need attractivity for these peoples, and it will be the key for the continuity of the development, because we are better and better on the back and middle office services, that we are difficultly able to attract people in investment. So it's this part.
Thank you. And then, I mean, it's interesting. It's relatively close, but the people point is indeed some point which comes back, and I think LPEA is trying to do a lot in that area as well. So I think it's an important point. Jérôme.
Yeah, three small points, 2 Luxembourg related and 1 Europe related. The first 2 for Luxembourg. The first one is in relation with the backing of startups. There really is a funding gap. It's a little bit technical, but I was alluding to it earlier. It's easy to get funding from family, friends, and fools, as they say. And then there's nothing after that. And then there's more institutional money from VCs. So what we call the pre-seed, there is a gap, which is not the case in other European countries, because in other European countries and the 27 others, there actually is a framework for tax incentives, and which is not present in Luxembourg. So I think we need to be thinking about how we funnel money to real estate, and maybe divert part of that money to the startup innovation ecosystem. The second thing is one very little piece of sand in the well-oiled infrastructure of Luxembourg is that SPVs need to be able to open bank accounts, and that has been a very thorny issue for quite a while now. It may sound very simple or stupid, I don't know, but actually it prevents the industry from working effectively. And the third point relates to what happens in Europe. Martin showed a very eloquent slide that was with the burden of regulation. In my companies, we're 7 people, and there's 1 person in charge of all the legal and regulatory compliance. I can tell you it's if the European regulation is by and large very positive, is a positive force, it protects investors. Sometimes it's just impractical and nonsensical, and I think it's important for all of us to make sure that we work together to make sure that this is not the case in the future.
Yeah. A good point taken on the regulation. I think it would be interesting to make an efficiency check on the regulation, what is needed, and also what is not needed, and also for which industry, because we currently have a regulation which applies to all industry in the same way, and I'm not sure that's the most efficient way of handling this. On the SPVs, interestingly, I was going to give a call to Stéphane no later than tomorrow on that topic, and we know that topic, and it is indeed a problem. So bank accounts, it's a huge issue to open bank accounts. Well, thank you very much. I think we have one question, and I think it's an important and interesting question. So maybe shall I read it, and let's see who wants to answer it on the panel. So the question is, tomorrow we will vote on the Benjamia report in the European Parliament on the further developments of the CMU, to which I tabled a series of amendments. I've expressed my concerns in my amendments about a more centralized supervision of the financial sector, because I believe this would hamper, for example, the pioneer position in sustainable finance we currently have in Luxembourg. The question is, what is your take on that? So the question was asked by Christoph Hansen. Does anyone have a view on that?
I do.
Yes.
Well, go ahead.
Well, I don't want to take the floor from anyone else, but evidently I do have, as Invest Europe, we do have a view on that. And thank you very much to the MEP Hansen for that question. I'd make two sort of Invest Europe points, and then I'd make maybe a more personal comment. I think the first point from an investor's perspective, and we do represent members who are located in multiple jurisdictions. I think the point for us would be that we would actually like to see as uniform supervision as possible, to make sure that the administrative burden that we just talked about isn't differentiated or addressed differently or too differently in various jurisdictions. When I say uniform, I do not say centralized, however, and I think that's to the member of the European Parliament's point here, is there is a difference between having administrations being uniform and as easy accessible from an investor's perspective as possible, and then having a centralized. And there is a good point that if we centralize everything, then you also kill the competition with the supervisors in actually promoting supervisory standards and actually promoting specific supervisory standards that would help to the transition that our members, your companies, are actually also at the forefront of. So the transition to more digital, as alluded to in the question, a transition to a greener, more climate-friendly economy, all of those transitions, if you centralize it, you may risk of actually also killing the innovative supervision. And I think sometimes we suffer from this thinking that government or regulators and supervisors can't be innovative, but actually there can be a very healthy competition between them. So to the point made, I think the amendments and the amendments, I haven't read all of the amendments, my apologies for that, but the idea behind the amendments of making sure that we don't centralize in a way that we actually kill the supervisory competition and innovation, I think is a very healthy approach to have. On a personal note, I'd just add also that for my sins, I've been doing European politics or policies for the last, basically since the Stone Ages. And I think when the issue of supervision, national versus European supervision, emerges, it sucks out so much energy from the regulators, and these member states start arguing between each other, and they argue with the European Parliament. And it's a necessary debate to have, but there are so many more important things in the capital markets action plan that, from my personal point of view, and I should say I'm speaking outside mandate of Invest Europe here, but I'd be a little bit cautious of letting this suck out the energy, instead of looking at how the ecosystem should work, instead of looking at the initiative that would support better investment environment, better downstream investments for insurers and banks and semi-professional investors, looking at how the AFMD can be construed so that we actually get an even better brand for the AFM, which is actually now, and I think Jerome alluded to that, is actually a very supportive, or also Serge was saying, it's actually a relation that actually works because it's a good brand and it shows that it supports investors or protects investors. So my points are, yes, we note that this centralized move, and no, we're not in favor, because We want uniform but not centralized. And then personally, it's like, please don't let this suck out the energy of all the good things that also needs to be done. That was a long answer to a short question. My apologies for that.
I think very, very good answer. Thank you very much. And I think Christoph Hans is in agreement with us. So I'm handing back to Stefan.
Yes, thanks a lot, Stan. Just also wanted to add on that specific point that we completely share from an LPEA perspective, that vision that we need strong, agile and innovative supervisory authorities and not really some centralized items. So I think that completely makes sense, and we wanted to thank Martin and also Christoph for those views, which we then here share from a Luxembourg perspective. Then also we wanted to thank all the panelists, moderators and speakers of today for that great roundtable, and also you, dear audience. We hope that you were able to get some answers concerning the private equity and venture capital industries. If you have questions, we are here to help out, to share information, points taken on the how to make Luxembourg even stronger with super professionals, with the training academy, for example, to have a cautious regulatory monitoring of what's happening in Europe, and certainly also to build together the future of Luxembourg and the EU. Thanks a lot again for your time, and see you soon. And here you have a quick preview of our next events on LPEA side with Alain Kinch and also around ESG and sustainable finance. Thanks a lot.